All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Guard Capital. Glad to have you this morning and every morning here on the YouTube channel, 9 a.m. Eastern Standard Time. Ready to rock? It is Thursday, September 7th, 2023. Happy kickoff to the NFL season. We got the Lions and the Chiefs tonight. Always exciting. That's usually the sign of fall coming, and fall is probably my favorite season out there of all. So what you're seeing in front of you here is the Discord, the free Discord blog. If you haven't joined in, feel free to take a look at the description below. You'll have the link there to sign up for the free market blog. Prepare your day with us. Pre-market plan all here. Live market blog all here. Workshop and webinars when you got nothing to do but you want to learn a little bit. Take a look at that. All right, let's go ahead and get started this morning. The Dow is down 97 points. The Nasdaq's down 200. S&P 500 futures down about 0.78%. I had to get out of my long position. I was green yesterday at close. Russell 2000 futures down about 0.59%. The market is down because Apple is down. I would say they're now about 3.6% pre-market, and that's on the headlines regarding China banning iPhones for, I guess, their State Department or their government entities. Dollar index is up this morning, 105.04, broke above that resistance. We got as high as 105.15 this morning. I do have a euro dollar short. We are green on that, so that's nice. Nice little dollar hedge for the market. Works out so far. I think we're up about 40 pips at the moment. Euro dollar is at 106.94 as I'm seeing. Breaking down a little bit, we know our targets. Let's see what we get. The volatility index, talked about that on Monday. I expected a higher VIX. I expected pullback on crude. Right now it's kind of chopping after that OPEC headline. But again, stocks being down, that was something that we were expecting. And it was really just because of what? Technicals. That's really all. What's the reason to buy? We talked about all those reasons. And now we're going to kind of shift that, yes, it only takes a couple days to shift. Now we're starting to get to oversold conditions. This is probably where we're going to bounce you, and we're going to talk about that now. So we're starting to take a look now. Once everyone is extremely pessimistic, this is where the buying comes in, kind of like right here on the 25th of August on really no news. So just have that expectation. Again, if we start breaking some levels, which we'll talk about, we can go a little lower and we can short that. We'll put our bear hats on, like I said this morning. 10-year Treasury yields 4.282, so yields pulling back a little bit, even though the dollar is up about a quarter point. Crude oil, like I said, kind of chopping around 87.24. Tried to short it 6 a.m. I was break even, and then boom, we had an OPEC headline right in the morning from Saudi, and that's what made oil go to 88.08. I think about a couple of weeks ago, we talked about that golden cross on crude oil, talked about energy stocks moving higher. I did see some UOA on CVX. I am in that personally. It's red, so I'll see how we go this morning. It was the 170 calls on Chevron that I sent out. It was really an unusual options activity. I had tons of volume right out the gate on Monday. The week is not over, obviously, but we're going to see what we're going to get. Gasoline futures up 1% this morning, $2.62. 19.45 for gold futures. So possibly a little fear out there, even with the dollar being higher. If you're seeing gold going higher and the dollar higher, it's more of a risk-off sentiment than anything else. If gold was red, then I would just be it was pure dollar move. Silver futures down about 1% this morning, 23.28. Copper futures down about 0.59%. Again, we talked about the euro dollar. Dollar yen is down 35 pips, 147.30. Pound dollar, 124.57. That's down 48 pips. Bitcoin is absolutely flat still, 25,690 on futures contracts, with Ethereum down 0.43%, 1622. Good morning, everyone. We are around the horn. Let's go ahead and talk about the S&P 500. So we talked about this possible inverse head and shoulders. That's not going to happen. So again, that's invalidated. Two types of technical patterns have broken. Literally 1, 2, 3, 4 in 5 sessions. So we were setting up for a head and shoulders on the daily. What happened? We broke out of that neckline, invalidated. If we go to the hourly, it makes a little more sense. Actually, let me see the 4-hour chart. Again, this is S&P 500 futures. Again, we were looking at possibly an inverse head and shoulders. Here was your neckline, 44.67. We didn't get there, so we broke down to 44.37. Now you're probably saying to yourself, now Carlos, how deep can the rabbit hole go? 4,400. That's it. If you break below 4,400, things may get a little crazy, just like March, where we broke down to 38.50. I don't think we get to 38.50, but you start breaking 4,400, that 100-day moving average looms, 43.65. Do I think we get to 4,400 below? We can wick it, but I think that's where we bounce. If anything, we're probably going to bounce relatively soon. And why do I say that? Put-call ratios. Anyone remembers these? Yesterday's put-call ratio was the highest since mid-August low. What happens towards the tail end of August? Class? End of August? Oh yeah, this is when put-call ratios were at their lowest. We had a nice boost towards the tail end of the month. What do you think is going to happen again? And again, there's no catalyst. There's no Fed. There's no jobs number. We had jobless claims today. Labor market is very strong. I'll give you that. But other than that, ain't no CPI till next week. Not inflation, not tons of inflationary data. What are we learning today? What is new? Other than China banning some iPhones, and again, even Bank of America placed out a note. Take a look at our market blog. We talked about that. There was a quote from Bank of America saying that every 1 million iPhone translates to about a penny in EPS. So China accounts for around 40 to 50 million units for Apple. We estimate 5 to 10 million unit headwind, meaning a pullback in buying, if such a ban were to go through. So there is no ban yet. It's just a threat. This is the market we are in. Remember, we had the threat of a lowering credit risk on the United States debt. Remember when we had that threat in regards to the big banks? Guys, these are just headlines. This is what happens when there's nothing happening. So you have to be extremely careful. It doesn't mean you did anything wrong. It just rains sometimes. It's just these headlines come in and you're just really just battling algorithms and these machines right now because they're just taking any headline and running with it. And that's what I mentioned yesterday on the blog as well. I talked about kind of how the machines are just kind of trading back and forth, ping-ponging. See here. Let me see if I had that note. I know I had it on the futures. So either way, I talked about it on the futures the other day. The futures chat regarding it's really just machines bouncing us back and forth. So any kind of headline is just going to make us move. And that's a fact. You know, Nvidia really doesn't have anything to do with iPhone sales, nor does Tesla. It's just China. And again, more China headlines means more volatility. But the last time we had put call ratios this low, again, let's get back to that. You can see this was low of August on S&P futures. Guess what happened? We soared. We're starting to get there. So we need to start looking at a position to play a reversal. Granted, I try to play reversal on crude, so it doesn't always work. I'm going to be honest with you. But again, do not fall into the trap as of yet out the gate. Try to short because this can flip rather quickly. Again, put call ratios are simply this. How many puts versus how many calls? Again, just like a ratio. So if we have a 2-to-1 risk ratio, that means there's double the amount of puts outstanding versus calls. And it goes inversely too, 1-to-2. Again, that means double the calls. Usually in a bull market or a nice push higher, we'll get momentum with more call buying. Again, put call ratios is no different than what we look at because we're seeing momentum. So again, there's more puts on one side. We're going to try to see if we can ride that wave if the technicals absolutely fall in line. But as of right now, we're starting to get a little bit pessimistic as we got towards the tail end of August. And then what happened? Everyone got stopped out and we had a short squeeze. So expect that to happen again. The question is, unless we break 4,400, then that's a whole different story. But you can see here on S&P 500 futures, again, most of this is a China headline with Apple. Understand that. The stock is down 3% this morning. Does not happen very often. And you could see right here, 44.24. Why did I have that green dotted line there? That seems to be that level of support that we had in early July. Yes, we broke below it in August, but once we did, we held that trend line and then we soared. So I do fully expect us to have a reversal. The question is, when does it begin? Could it happen today, tomorrow, next week? Remember, next week is the first full week of September, and finally, everyone's back in the office, quote unquote. So take that as you will. We'll see what we get in terms of volume. I'm watching Intel very closely. Intel's pulling back obviously because of that Apple headline. That's really the risk I have open in terms of signals at this moment is Intel with a euro dollar short, which we are green. We're bouncing a little bit as the dollar is pulling back. One more note, and again, I will go ahead and answer some questions here. I wrote this on the blog as well. And again, I want you guys to use the blog as kind of a journal. So what I do too is I actually write down kind of in the morning, what do I see? I write down my levels and everything like that. I actually sent out a picture of the watches and charts. I was just scribbling away yesterday, writing down some levels. When I have some downtime in front of the computer, I'll write down some levels that I'm looking for. I posted on the watches and charts. I don't think we're going to get anywhere there as of right now, other than Shopify, which is a possibility. Below 63.57, I'm looking at the 60 puts. There's a downside gap. We'll take a look at that here in a second. But I really want to emphasize this point. I said, okay, so if we were to get a dollar pullback, stock rally, it would be very soon. And I said this yesterday right around 12:30. And we did get a kind of a push higher towards the end of the session. But again, still ended the session red. We were at a 69 RSI. We're way above that now. Since we got as high as 105.15. 105 is a very big level of resistance, guys. So in my opinion, a bottom, at least short-term in stocks, is sooner rather than later. Again, we tried that ES long. We didn't get stopped out. We just closed it. We'll see if we can get back up the level and see if we can catch it again. But a lot of this is just Apple headlines right now. Yields are not exactly soaring. You can see we're below the recent highs of 4.3 to 4.36%. It's really just the dollar at this moment. And that's kind of how we have to have that perspective, that really nothing has changed other than the fact that it's a slow, choppy market. Yes, we're down this week as expected. It was just a slow melt, and it's really hard to trade that. I kind of regret missing Apple short yesterday, but we did DraftKings calls yesterday, so we didn't leave with nothing. We got something, and DraftKings got as high, I believe, as 53%, and that was a nice trade. Let's go and answer some questions. Good morning. Good morning. What up? Good morning. Not options related. Looking to park some cash in a good ETF, I assume. You said EFT. Or stocks that pay high dividends for long term of five years. What would you recommend or suggest? If you kind of want to make things on autopilot, just buy the S&P 500 fund, VOO. It does pay a dividend. It's just not high dividend. If you're looking for capital return in the stock market right now, I would not buy dividend stocks at this point, because you can get a better return just holding it in a savings account, in my opinion. Now, if you're looking for growth and you kind of want to just ride the stock market higher as we go higher, then just buy VOO, SPY, one of those names, and you'll be fine. But dividend stocks here, they're just not attractive because you can get risk-free return on an online savings account for 4.5%. And for now, that's probably your best bet, and it's liquid. You don't have to sell anything. You just park it there. And really, until you see interest rates stabilize or interest rates fall, that's when you kind of lean in to more of the dividend stocks. Dividend stocks are not the best when we have a high rate environment. Dividend stocks are best when we actually have a low rate environment, because if lower rates are around, they're not going to go ahead and actually attract the dollars in order to catch those yields. You're looking at more into, a Procter & Gamble, a Coca-Cola that's paying 2-3% in dividend. Granted, depending on how market reacts to lower rates, for all we know, dividend stocks go higher, and what happens? Those yields go a little lower because it's based on the last dividend payout. So again, you can kind of work with it. I think just to make life easy for 5 years, put it in an S&P fund, and again, you'll get dividends as well, not tons, but you're really focusing on growth in a higher yield environment, because you need to outpace inflation. You need to outpace high yields, right? That's kind of the deal. So if CPI right now is at 3%, and you make 3.5% on a dividend, your alpha is 5.5%, 0.5%, and that's not including the stock up and down and the roller coaster and possible capital depreciation, meaning the stock price. But if you're just doing an good old savings account, online savings, SoFi, Ally, whoever online, or Axios online banking, again, you're not doing anything. You're just sitting on cash, and it's just paying you a dividend really for free. I consider that free parking at this point. That's what you can kind of call it. Why are blue chips like KHC, WBA getting destroyed? In terms of Kraft Heinz, I believe that's more of a management issue. I don't know really exactly what the issue with them is. I don't believe that it's just an industry issue, since they're just packaged goods. Procter and Gamble has done exceptionally well. The soda brands have done well too. Pepsi always raising their dividend. Coca-Cola is as stable as you can get. So I think that's more company related than anything else. But in terms of WBA and CVX, that's more of a Medicare thing and a lot of competition. So again, I don't know if you've heard about Mark Cuban's new drug company, his pharmacy that really cuts prices, lower overhead. Amazon can step in and take over the pharmacy role. Yes, we do know that people like to go to the pharmacy and see their pharmacist. That's for the older crowd, but for most people, they don't give a crap. They just rather just order it and deliver it to their door. And that's kind of the level that we're getting to. So CVS's and the Walgreens Boots Alliance crowd, that's the older generation that still like to walk into their pharmacy, and grab their prescription. But we are in a different world now. Most people, middle class, middle age, kind of in their 30s, maybe their 20s, youth, are very accustomed with the pandemic to have things shipped at their door. Does CVS deliver? Probably. I'm not really sure, but that's more cost to them. If you have an Amazon that already does 2-day Prime delivery, why not them do filling your prescription? The only two industries, in my opinion, in the retail space that is Amazon proof is really Home Depot and home improvement stores. You're not buying lumber on Amazon. That's not delivered to your house. And car parts. Those are really the two things. I mean, you're not going to order something for a starter for your 2014 Ford Ranger on Amazon. You're going to go to the Advanced Auto Parts, which actually has been beaten down, O'Reilly's or AutoZone, and you're going to ask about the parts and get help. There's certain things that there's still a human touch element. There's certain industries that are never going to be touched, or they are, kind of Amazon insulated. Unfortunately, Walgreens and CVS is not. So is that a company that you want to invest in? Hell, their sentiment has never been lower. They're not going broke by any stretch. They lease a lot of properties. The question is this: what are they going to do to lower costs? Perfect example: Metaverse. Metaverse had high costs, and when they started slashing and really lowering their costs, I think they laid off a lot of people. That's when the stock started to bounce. So that might be that next shoot to drop for a CVS and Walgreens, is closing stores and actually reducing headcount. We also read a headline last week, on Walmart. Walmart was asking their pharmacists to reduce work hours voluntarily. So, we do have a tight labor market. We do have a shifting consumer that is more, indirect, not face-to-face. Deliver it to my door. I don't want to leave my house. We are all accustomed to Amazon Prime 1-day to 2-day shipping. That's not going to be helpful in the long term for pharmacies, which are pretty much a dying industry. Compared to this, guys, do you guys remember Kodak? Kodak is the photo company. Maybe, I don't know, maybe you guys are too young here, but back in the day, we used to get photos actually in our hand. We had to go to a photo booth, drop off film, and then pay for it and wait for an hour or wait for a day. And then that's when you saw all the photos you took. We don't have that anymore. All your cameras on your phone. So again, that's an industry that changed, and Kodak did not survive, unfortunately. I'm not saying that CVS and Walgreens will never survive, but could it be turning onto a new leaf? They need to change something. Pharmacies, cable companies, we are in a new economy. COVID and that kind of stay-at-home economy really shifted a lot of things. There's different school districts I read as well that are shifting to a 4-day work week or 4-day school week. It's going to be more at home. It's going to make things a little more accessible. It's going to lower costs across the board, but it's going to hurt commercial real estate as well. So that's a whole different conversation. I can go on and on about what the future holds for the economy and how consumers are shifting and changing industries literally before our very eyes. So I don't want to go too into depth, even though I probably already did. Is it due to rates? Not necessarily those companies are just due to rates. No, that's not really the issue. I just went over the whole fundamental analysis on why those companies in particular are getting pulled back. Remember. Yes, I remember. So I'm assuming that Cynthia's boost of motivation is saying that she remembers the Kodak film days back in the day. So that was a lot to talk about. Intel this morning, if you have those calls with me, we're looking for 37.62. I went ahead and did a recap of our open positions on options at the end of every day. And again, we want to see if we can hold that 50-day MA, the 50 MA on the 1 hour. Again, I really don't base myself everything on there on a short-term time frame. But again, I'm just watching. We want to get to 37.62. Is this sell-off over? Are we done with this? Do we tag that kind of little green dotted line there at 44.25? That was my previous stop, but I got out, a little early. Wanted to salvage a little bit. The question remains, do we get a reversal? And when does it happen? Is it today, tomorrow? Is it next week? Is it in 2 weeks from now? Because in my opinion, I don't think we break 4,400. I think that put call ratio has got to have ahead of itself, and we're going to see some kind of bounce just to kind of frustrate everybody. The VIX being higher was expected. Again, insurance was very cheap. Very hard to trade that, obviously, but again, something to watch. Apple breaking some support here on the 1 hour. You could possibly look at the 170 puts if we break 175, but that's a difficult task because those put premiums are going to be expensive. They're going to be up today. So best bet is to hold off. If we start breaking below 175 and it gets really ugly, we may have to take a stab at those 170s. Maybe. We'll see what we get, and we'll make it quick too. But that's what I'm watching this morning. If Apple really starts tanking and we start testing the mid-August lows. Levels to add Palantir. See, people have their shopping hats on. Nice pullback, but nothing yet. Kind of chop. 1465 isn't the worst place to look at. Again, guys, we still have a golden cross on Palantir. We talked about that golden cross earlier this year. So it's been holding up. The only problem is we're setting up for a head and shoulders. So what you're looking at is 1385. See if that holds. But right around that $12 zone, that was that previous breakout. See if we retest. $12 ain't a bad place to look at Palantir for adding. But we are kind of setting up. It doesn't look the best. An actual head and shoulders pattern. Doesn't mean, we can't bounce out of that. We got that out of the way on S&P futures as well. Need to break above 1632 for added momentum to the upside. Break 1465. That's what's coming next is 1386. I put that on the watch list as well this week. So we'll keep an eye on that very closely. All right, guys, thanks again for your time. Have a great rest of your morning. We will see you guys tomorrow for the next morning note. Kansas City, Detroit. I like Kansas City -5.5. And again, that's just me messing around. And the over. So I like Kansas City in the over. I'm probably wrong. I do okay in terms of handicapping, not the best, but I like it. Let's see what happens. So I wrote it down, Kansas City -5.5. I put a unit on it with Nick. He's in New York. And I put the over, I believe, at 52.5 or 51.5. So let's see. Let's have fun. DraftKings, right? Let's watch DraftKings and see if we get a little more upside. Maybe there's a headline or two post NFL game, and they say, hey, we had the most bets ever, ever in the history of DraftKings, and we soar. There's been a lot of volume there, and there's a gap to fill here at 31.48. Just keep an eye on it. Never know. I do hold those. I still hold in DraftKings, even though everyone closed, and that's killing me, but I will hold. Have a great rest of your morning. We'll see you guys tomorrow. Cheers.